Ladies and gentlemen, good day and welcome to the Q3 FY23 earnings conference call of Oriental Carbon and Chemicals Limited. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is recorded. I now hand the conference over to Mr. Akshat Goenka, Promoter and Joint Managing Director of Oriental Carbon and Chemicals Limited. Thank you, and over to you, Mr. Goenka.
Good afternoon and a very warm welcome to everyone. Along with me, I have Mr. Anurag Jain, CFO, and SGA, our Investor Relation Advisors. We have uploaded our results and investor presentation for the quarter and 9 months ended 31st December 2022 on the stock exchanges and company website. Hope each one of you had a chance to go through the same. During quarter 3 FY23, the company clocked revenues of rupees 104 crores, a growth of 8% year on year. However, volumes were impacted due to disruption on account of the war and other issues, mainly in Europe. EBITDA has also grown by 19% to rupees 23 crores and PAT stood at rupees 10.4 crores. Margins were impacted due to higher input cost and freight cost. We also could not get expected allocations from North America this year, primarily due to high freight rates. We are approved with our customers there and expect to be more competitive for next year and win the business then. As a result, we don't expect to start the second phase of expansion of our project right now, and we will again review the situation in the next 6 months. In spite of this year being very challenging on sales and costs, we are comfortably generating surplus free cash flow. Debt reduction is going at a good pace. We are even paying some term loans early to save on interest cost. By the time our demerger's appointed date comes around, we expect to have less than 85 crores of term loans to remain in the books. This is a very, very low and very comfortable amount, and this is an extremely positive situation to be in. The demand sentiments for a majority of the automotive segments such as passenger vehicles, commercial vehicles and tractors have remained healthy, aiding in the improved offtake for the industry participants. The domestic automobile sector has experienced a robust resurgence in the current fiscal year, aided by a recovery in economic activity and greater mobility, and is expected to grow at high single-digit levels across segments in FY24. Commercial vehicle volumes could see a growth of approximately 9% and passenger vehicles to see a growth of approximately 10%. A favorable mix of factors is propelling demand for commercial vehicles to their pre-pandemic peak in the ongoing financial year, aided by robust recovery in demand due to the increased government spends on infrastructure development, increased fleet utilization, better availability of financing and replacement demand, which will all support sales of commercial vehicles going forward. The Indian tyre industry will be able to scale a turnover of rupees 1 lakh crore in the next 3 years on the back of new capacities. The industry has completed investment of rupees 35,000 crores in the last 3 years in new capacity creation and debottlenecking, with the major beneficiary being truck and bus radials and passenger car radials. In the recent ATMA summit, they are projecting growing at a double-digit CAGR for the next 10 years, which augurs very well for us. They are talking of tripling in the next 10 years. The trend of shifting production out of China, along with the competitive and conducive environment, is making India a preferred global supplier of tires. Coming to our demerger. The demerger of the chemical business undertaking of the company to OCCL Limited is progressing very well. SEBI and stock exchanges have given their approval for the scheme, and we have filed the application in NCLT Ahmedabad. The scheme is pending before the tribunal for their sanction and approval. We expect all the shareholders to support this scheme very well for the meeting, which will be held under the NCLT's directions. And this will be a very important step in the growth of our company. Now I would like to hand over the line to Mr. Anurag Jain to update you on the financial performance of the company.
Thank you, Akshay. I will take you all through the standalone financials of the company. Total income for Q3 FY23 stood at rupees 103.6 crores as compared to rupees 95.8 crores in Q3 FY22. A growth of 8% year-on-year, and for 9-month FY23, it was rupees 363.5 crores, a year-on-year growth of 28%. EBITDA for Q3 FY23 stood at rupees 23.4 crores as compared to rupees 19.7 crores in Q3 FY22, a growth of 19%, and EBITDA for 9-month FY23 stood at rupees 71.1 crores as compared to rupees 66.8 crores in 9-month FY22, a growth of 6%. EBITDA margins stood at 22.6% for Q3 FY23 and 19.6% for 9-month FY23. Profit after tax for Q3 FY23 stood at rupees 10.4 crores as compared to rupees 10.6 crores in Q3 FY22 and stood at rupees 32.2 crores in 9-month FY23 as compared to 35.6 crores in 9-month FY22. PAT margins stood at 10.1% for Q3 FY23 and 8.8% for 9-month FY23. With this, I would like to open the floor for questions and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Saravanan Balakrishnan, an individual investor. Please go ahead.
Yeah, thanks for giving me this opportunity. Sir, my first question is primarily on the raw material and freight cost. Like from January, the freight cost based on Baltic Dry Index has significantly come down, and even the sulfur cost has come down. So will this benefit pass on in the coming quarters? That is question 1. And on the last conference call, you mentioned the pricing could only be passed to the customer with a time lag. So could you elaborate more on that?
Yes, you are right. The reduction in sulfur and the reduction in freight costs are all positives for the company and should help us in the future. And yes, you are right that there is a time lag in passing on the prices, but that has now been corrected because the prices have stabilized or are coming down now. So that has now been corrected. So that was an issue till earlier quarters, but not now.
Got it. So you mentioned about different OEM tire companies have communicated about expanding multiple times in the next 5 to 7 years. Is there any interesting trend or again feedback coming from the OEM partners? Especially from a product standpoint, so even last time you spoke about different bloom characteristics and dispersion, so are getting researched more on the insoluble sulfur product, right? From that standpoint, I'm asking, sir.
No, these are the characteristics which continue And there is nothing new to add because this is not something which is developing on a daily basis. So, the concerns of the customers remain the same, and these are the parameters on which we will continue to excel and sell our product.
Got it. And also the review of expansion of the second phase, I think that we'll again revisit next year, right? Post how the demand is looking like.
Yes, we'll evaluate it after 6 months.
Got it. And one last question, sir, about the global insoluble sulfur downturn, any signs of existing capacity getting reduced or new capacity coming in, especially from Flexis?
No, I mean I have not heard of Flexis talking about reducing or expanding their capacity.
Got it. That's it from my end, sir, and all the best. Thank you so much.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1 on your touch-tone phones at this time. We have the next question from the line of Viraj Shah from Shah Investments. Please go ahead.
Hi, sir. Good afternoon. So, sir, as in the results, I can see the top line has grew by 8% in quarter 3 on YY basis and 28% on 9-month basis. You mentioned that the volumes are impacted. So this would be on realization front, or can you show some colors on that?
Yes, the volumes were impacted, and therefore, for the quarter, the volumes were less than what they were on the earlier quarter.
Okay. Thank you.
Thank you. Participants who wish to ask a question may press star and 1. The next question is from the line of Karan Mehra from Mehta Investments. Please go ahead.
Hello, sir. Good afternoon, and thank you for the opportunity. Sir, can you give some commentary on how our business is going on in Europe, since it's a 50% plus contributor? Also, in case you can elaborate something on the current demand scenario.
So, from a market share perspective, our business is stable and growing in Europe. However, there was a sharp downturn last year in Europe, which resulted in lower offtake of overall capacities. And this year, first things were looking quite bad, but now signs are more encouraging coming from Europe. So we have to wait and watch and see how it unfolds.
Okay. And sir, our EBITDA margin, so it has reduced to 20 to 22% level, which earlier we used to maintain about 27 to 30%. So why aren't we able to pass on these costs even when there are only a few players for this insoluble sulfur?
It's not about few players or more players. The fact is that today the global capacity utilization is, I would say, 70% or below. So of course that demand supply mismatch has been there for some time, and it will be there till demand of the product doesn't grow and the economy doesn't grow. Secondly, as we've always said, that apart from margin, what we try to focus on is a fixed margin per ton. And as the sales price goes up and the turnover goes up, even though the margins may be the same or thereabouts, or even if they go up or down a little, the percentage term will reduce, and the vice versa will happen. In case the selling price comes down and the costs go down, suddenly for the same profit the margin will look higher.
Sure, sir. That answers my question. I will join back the queue for further questions. Thank you.
Thank you.
Thank you. Anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Samarth Singh from TPF Capital. Please go ahead.
Hi, good afternoon. Thanks for the opportunity. with China Sunshine having expanded their capacity, I think China now has finally become has gone from being a importer of insoluble sulfur to being neutral or maybe even a net exporter. So have we seen them get more aggressive in trying to get validations from the MNC clients and trying to gain market share there?
I would say that China is now competing in Asia along with China, but their movement still has not happened towards the West.
Okay, so we are not seeing any more aggression from them so far.
Aggression in Asia, but not in the West.
Gotcha. And
also, if you actually saw the recent remarks that they let out, it appears that this capacity expansion that they are going to do or have done or something of that sort, they may shut down the old capacities.
Right.
That is what they have alluded to in their remarks. At least that's what I could cull out of it.
Got you. And also, I think Shikoku is planning an expansion, right? A 20% increase in their capacities.
Yeah. We've read the news that they are planning on increasing by 10,000 tons approximately. Adding another line. Let's see how that unfolds.
Okay.
Difficult for me to comment on their strategy at this stage.
Right. But in general, we would think that given the undercapacities, your competitors would not be going ahead, but it does not seem like they are, maybe they have lower return expectations where they're going ahead and putting capacity.
We also don't know whether the likes of Shikoku will put this capacity. Then maybe, their plant's also quite old. Maybe they'll shut down an old plant. It's very difficult to speculate on their mindset for it, because we do know that we do know the prices they are selling at. We know the return profiles that are happening. So it's difficult for me to comment on the strategy behind this.
Fair enough. And then just a question on Europe. I think if you could just give some color. I think you said that our volumes were lower quarter-over-quarter in Europe, but on a YOY basis, at least I think at least passenger vehicle sales have been pretty strong in Europe for the months of October, November, and December. So have we seen an increase there, or are we more towards commercial vehicles in Europe, or?
No, I'll let Anurag answer that. But just one small thing that we noticed in quarter 3, we noticed a lot of companies across the globe did inventory correction. So they had built up inventories, and then they started reducing it. And now, we saw some order reductions coming because of that. And now we are seeing things normalize back and the orders coming in. Anurag, anything to?
No, you're absolutely right, Akshat. And I just want to add 2 points that we sell to tire companies, and whether it is more on passenger vehicle or the commercial vehicle is not something that we can make out as of now. And yes, the export sales to Europe were lesser in Q3 versus the last year Q3. But there were 2 factors, demand and inventory correction, and I think that is going to be corrected in the coming quarters.
Great. Last question from my side. If you could please provide me just with the cash, debt, and investments on the balance sheet as of the end of the quarter.
Yeah, sure. The cash, debt, and investments.
That's what
So, on debt, I gave my expected projection for long-term term loans as of 30th September to be sub 85 crores, because we are in process of repaying quite a lot. What is the exact position as of now?
The long-term debt today, as of 31st December, was 114 crores.
Okay, 114 as on 31st December. So we expect that to reach sub 85 by 30th September.
Yeah.
Okay. And cash and investments?
Investment and cash put together was 170 crores.
Did you get that, Samar? Investments and cash put together was 170 crores?
170. Great. Okay. And you said sub 85 around the time of the demerge. are expecting to be around 30th of September?
I mean, we expect the appointed date to be sometime in quarter 3. So we don't expect it to be earlier than 30th September, but 30th September or in sometime in that quarter.
Got it. Excellent. Thanks a lot, guys. Good luck.
See, 104 है या 114 है मेरा?
ये long term बता रहे हैं. हाँ.
अच्छा.
Thank you. The next question is from the line of Nehal Jain from SK Securities. Please go ahead.
Including current batch.
What is the outlook on the Indian tire industry?
The outlook on the Indian tire industry in the recent ATMA summit, they said that they will grow 3 times in the next 10 years, which is a double-digit CAGR.
Right. So, but we've heard that, like, what's the international outlook? We've heard that in Europe there is a slowdown in the tire manufacturing sector because of, manpower issues and higher energy costs. So, what is your views on that?
Our view on that is that I would expect Europe to be stagnant in the coming years, maybe grow in a very minor way. I think the US and Latin America would do well. India, of course, is going to go at double digits. Asia is also expected to grow.
Right. So, but do you think that, what impact will that have on India? Will India's tire manufacturing segment will boost, or what impact will that have on us?
I'm just going by the estimates that they themselves put out for themselves of double-digit CAGR growth for the next 10 years. That's their own estimates.
Okay. Got it, sir. And with respect to radialization, how will that lead to growth, like our growth?
Sorry?
With respect to radialization, how will that lead to our growth?
So what happens is that, this is something which is now attaining maturity, but however is still a little bit away from perfection. Whenever radialization grows, insoluble sulfur consumption grows. So the effect is that, if the tire company grows, say, by 10%, insoluble sulfur consumption would grow by, say, 12%. So the growth of insoluble sulfur consumption should be about 1 to 2% more than the tire industry growth.
Okay. Understood, sir. Thank you. That was helpful.
Thank you. Participants who wish to ask a question may press star and touchtone phones now. The next question is from the line of Aditi Sawant from ADM Advisors. Please go ahead.
Yeah, hello. Thank you so much for the opportunity. I have a couple of questions. First is, how is our penetration levels in US and China currently? And where do you see that growing in next 1 or 2 years? Second is, if you can...
Sorry, go ahead.
Yeah. Second is, if you can help me with your volumes and utilization for this quarter and 9 months.
China penetration is next to nothing today, and we have no predictions for where it is going to reach in the next 2 years. It is anybody's guess, but we would assume it to remain what it is today. North America, we have been selling a decent amount over the last few years because we have certain plants allocated to us. It is an extremely important focus market. We have over the years been trying to get approvals and then allocations to significantly ramp up our sales in North America. We finally have all the approvals in place and continue to work towards more approvals. And I am very confident that in the next year or 2 years, or as things progress, we will start getting significant allocations as well from that market. But this year, we had some issues because obviously the freight cost was very high, so we were not as competitive as they wanted us to be. But now freight costs have come down a lot, and I'm sure that we are going to be very competitive going forward.
Yeah, thanks. That was helpful. And can you just comment on volume and utilization for this quarter and 9 months?
No, sorry, we don't give this kind of figures, please.
Okay. Just last question, if I can ask, is have we added any new tire customers?
Yes, we have. We have added new tire customers.
Okay, sir. Thank you. That's it from my side.
Thank you. The next question is from the line of Saravanan Balakrishnan, an individual investor. Please go ahead.
Yeah, thanks for giving me this opportunity once again, sir. So one quick question about Duncan Engineering. So last time, it was mentioned so we have significantly reduced the debt and also had a good spike in the sales. So just want to understand the end game with Duncan Engineering, and also are there anything that we are doing to improve the repeat order rates from the customers? Because last time, my understanding is 30% of Duncan Engineering's revenue is coming from top 5 customers. So are we also trying to diversify that number to a wider group?
So I'll try to answer all those questions. I'll do my best to do that. Look, as far as Duncan Engineering is concerned, we are at a growth, we're rapidly growing in that company. We have been growing for the last couple of years. This year also, we are on track to grow 30% from the previous year. And we are working on adding more people, more products, and as well as adding more customers. So we are certainly in a growth phase in that company. And there is no, I don't know how to define the end game, but the strategy at Duncan is to continue to grow by adding new products and new customers.
Got it. And regarding the margins, I think this is the current ones or the baseline metric that we are again looking at, right?
No, I never said that current is the baseline we are looking at.
Got it.
Our target is to maintain 15% EBITDA margin in that business, which is very good for that industry.
Got it.
And from an investor's perspective, actually, one should also look at the ROC and ROE of Duncan. I think it's a low. So far, we managed to do all this with very low capex. So the free cash flow generation is quite good.
Right. Makes sense. I think that's it from me, and I wish you all the best, sir. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1. The next question is from the line of Riya Verma from NR Securities. Please go ahead.
Hi, sir. Thank you for this opportunity. So most of my questions have been answered. I just had 2 questions. Firstly, how do you see the demand-supply dynamics for the insoluble sulfurs in the next 2-3 years?
We would like to always say that we see it improving because we don't see significant capacity coming online, and demand should keep improving. But the last few years, demand has been stagnant. So, unless we have some external issues, demand should be improving going forward.
Right. And secondly, do we see our market share increasing going ahead? View on that?
Yes, that is what we are consistently working towards every year.
Right, thank you. That answers my question.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and 1. The next question is from the line of Yogansh Jeswani from Mittal Analytics. Please go ahead.
Hi, sir. Thanks for the opportunity. So just one question on your US side of the business. So in this current turnover, do we have some contribution from US coming in, and can you help us quantify that? Also, with the approvals that you mentioned that are now lined up, going forward, what kind of turnover are we expecting from USA next 2-3 years?
So, as Akshat has already explained, America is a major focus market for us. And yes, currently also we are getting contributions from America. And we do see a majority of our growth in the next 2-3 years coming from America. There was one more question you asked. I missed that. Can you repeat that?
Sir, if you could quantify that percentage that we are getting from US out of the total turnover.
No, unfortunately, that is something I cannot specify as of now because of competition issues.
Understood. Next is, sir, on your margins. So, we know that the industry is facing difficult times, but going forward, do you think that the margins that we used to do 30% plus kind of, those will come back once the industry normalizes, or do you think that those margins can't be maintained?
So there are two aspects to it. One is, as I pointed out earlier to a similar question, we look at margins in rupees per ton basis, and when raw material prices are high, and even if the margins are maintained, as an overall percentage, EBITDA comes down because the turnover goes higher. So, for example, if the margin is 40% at 100 rupees, it is 40% at 200 rupees, is again 40 rupees at 200 rupees, then as a percentage it will come down. Now, assuming that the raw material prices come down to the levels that they were 2-3 years ago, then yes, it will our margins, EBITDA margins would recover, even at the same rupees per metric ton margin. The second is, of course, as the sales ramp up, and there will not be any significant increase in fixed costs, again our margins will come down to, it will help in our margins, EBITDA margins going up.
See, freight cost is a very critical element of this because, freight cost is not something that we can ever recover from our customers because our competition is not exposed to that. So if freight costs are high, then our margins will be lower. If freight costs come down, then that helps our margins.
Got it. So that's helpful, sir. Thank you.
Thank you. Participants who wish to ask a question may press star and 1. As there are no further questions, I would now like to hand the conference over to the management for closing comments. Over to you, sir.
I take this opportunity to thank everyone for joining on the call. I hope we have been able to address all your queries. For any further information, kindly reach out to us or Strategic Growth Advisors, IR advisors. Thank you once again.
Thank you. On behalf of Oriental Carbon and Chemicals Limited, that concludes this conference. Thank you for joining us. You may now disconnect your line.